This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus you got 9 out of 10 stars from the Coin Bureau guy. Bityard. Hello everybody, welcome back. We're going to look at the money flow index. We're going to try and make it as quick as possible. We're going to use Bitcoin as one example and Matic as another example, because Matic was, a low cap shitcoin basically back in the olden days, which was subject to extreme reads where you could think about getting out, and I can show you how useful it can be when trading altcoins, especially when they're in this mania phase, and their market caps are not that great. So what it basically is it's an indicator based on price and volume. So just like the RSI is price and momentum, this is price and volume, and that gives it an extra edge when you're thinking about where to sell, and also when things are looking weaker. So if you've not watched my bullish and bearish divergence video on the RSI, you should watch that first, just so you can understand about divergences and what to look for, because I'm going to show you divergences on this and it works exactly the same. But second to that, with the money flow index, one of the things that makes it different is the fact that it deals with volume, and volume is money. And if you think about it in reality, right, volume coming into something means loads of money coming into something. If you're holding a bag, if you want to sell, you want to sell to buyers, you want to sell to these buyers at more than you bought it for. These people are flooding into the system, waiting for somebody to sell them whatever it is that wants to be sold, and you're kind of laughing, going, this is the opposite of trading. You're buying when you should be selling. And the reason we know that is because the money flow index is reaching an absolute peak, and it's bubble pop territory when you start to see these overbought reads. With the RSI, you'll hear people talk about overbought and oversold. It's not as good as the money flow index, because like I say, the reality of the money flow index represents in many ways order books and how full they are with buyers. And if you want to buy something and you check the money flow index and it's really hot, really overbought, then you have to stand back and go, I've missed out on this one, I'm not getting involved, the risk is too high. There's only so many people that are going to come in after me to buy this, and what are the gains I'm looking to make? I'm looking to probably make more losses, in all fairness, by buying it here. So let's have a look at what it means. So this is Bitcoin on its weekly, and we can see 3 significant tops here. These tops are in what I would say is overbought territory. Anything over 95 on a weekly, you kind of have to think about getting out, seriously getting out, or at least limiting your exposure to that to a large extent. It's bubble pop territory basically, and this will be the case for anything that you'll see a read over 95 is bubble pop territory. We got a bubble pop over here, didn't we? This is December 2017, marked the absolute peak of the bull market. And if you would have looked at that and sold that at that peak, you would have saved yourself a hell of a lot of pain. 84% over a year-long period of consolidation, bear market basically. We found another peak over here. This one's slightly different because we did get an over-red territory, the highest it's been, 96, and then we got a lower one over here at 93 with a new high. This is bearish divergence, classic bearish divergence. On top of that is a really big move, so you would have to really seriously think about staying in any longer than this peak, which was 8,500. Now obviously in hindsight you'd look back and go, oh, if I'd have kept on you could have made like almost doubled that, but that would have marked the absolute peak, and you would have been in a bear market, or we'll call it a consolidation, of 53%. So we've got a peak over here telling us to be very careful, if not get out. And then we've got bearish divergence on the next peak. So if you didn't get out on that one, you would definitely seriously think about getting out on here. Look at this one over here. So we've got another peak over here, marking what was an extremely long trend, which was the best part of 1,000%. Yeah. And we got an overbought territory on the money flow index on the weekly. Once again, 95, telling us to get out. Now, if you did get out there, you would have saved yourself what, a 30% consolidation. The market at the time, went into alt seasons. Again, looking at the broader picture is always going to help you be a bigger trader. You can't just trade based on the money flow index. But what it was telling us was that this is more or less a significant peak when it comes to volume. And even though we did continue to make new highs, we got significantly lower highs on the money flow index, significantly lower. Bearish divergence to the max, and on this last bearish divergence, lower high. That was it. Couldn't take it anymore. Lower high, lower high, lower high, lower high. RSI had it too, and then lo and behold, it just plummeted. What was this, about 50% or something in a couple of weeks? Well, that's Bitcoin for you. Bitcoin can do that. You can only imagine the pain that altcoins can cause you if they have similar or reads to that, or anything close to a similar read to that. So we can work out, roughly speaking, that we can navigate through significant peaks when it comes to being overbought for the money flow index. And obviously the reasons why is because it involves money. If you want to dump into a market, if you're like a whale, for instance, you want to dump into peak volume. This tells you when volume is peaking, and you can dump hard into that sort of stuff, as we've seen here. So thinking about bottoms, you don't really think about the money flow index as oversold, because there are, and if you've been in crypto for long enough, you will see that some things get oversold to the point where they just die, and nobody ever buys them back. There's no volume anymore, and it's gone, and then whatever happens, delisted or whatever, goes to Probit or something stupid. It just dies. So you never think about it in the same way that you would look at navigating tops. You'd look at it with divergence, and we've got two really good reads here on the weekly here to spot a significant divergence with really good results. And so first of all, we've got lows forming around here. So this is our bear market. So we found a bear market low here and another low here with a low point here. Then the next higher low that we found was this over here, marking the more or less the bottom. So that peak with this higher low, that is the bear market bottom. And the money flow index helps determine that. And that could have, if you just stayed on long enough, yielded a 340% move. Fair enough. The next one we saw after that was here. So we had already found our peak. We were consolidating, found a low here. And we had a March crash. This is a COVID situation. But throughout all of that, we closed this candle body here with a higher low on the money flow index, marking divergence, bullish divergence, which went on to, if you held it on for this period here up until this peak, 600% move, and obviously a bit more if you'd have continued on after that. So we can spot divergences and expect uptrends to begin just like you would do with the RSI, and we've got two really good reads of that on Bitcoin's history. But looking at it now, you wouldn't look at this and go, well, there's no divergence here. This is a significantly oversold area on the money flow index, and look, this is the most oversold it's ever been. And you could buy into that, with an educated guess that it will go up again, and you probably would be right. But the chances are is that it probably would make another low, and with that low, it would make a higher low on the money flow index, and that would likely be the bottom. And you could go, okay, we've got our divergence here on the money flow index on the weekly, similar to this one here, significant, this one here, significant, this one here, significant, and that could be the one that takes us, effectively up to the new all-time high, wherever that might be and however long that might take. That is how you would look at the money flow index, right? And this is just Bitcoin. So Bitcoin, again, is a much bigger volume than something like Matic, which we'll look at now. So Matic, this is obviously back in the olden days, Matic was a massive shitcoin, but it yielded huge returns. We used to love trading this back in the olden days. And you can look at this just in exactly the same way. So Matic, very low market cap back down here. It launched and it went crazy. It did what, 13,000% in a 2-week period. The money flow index here on the daily reached 100, right? If you're ever in an asset that's at 100, or you want to buy something and it's at 100, you need to go for a cold shower and a long walk, and just that's what you need to do. You don't want to be trading that ever. And what happened after that? Well, we popped, didn't we? Inevitable pop after such a high read. So it came down over the space of 2 weeks, 61, over the space of 3 months. Was this almost 80%? Fair enough. But what did we get shortly after this? So we got a low form here and a higher low formed here. This higher low formed just more or less the day before the next big move took place. That yielded a 100% move, 117% move on the bullish divergence. Okay, so this works on short term, well, daily time frames as well. It works on all time frames, by the way. And we managed to get a decent move of that, 100% over what is this? 1, 2, 3, 4 candles. And look, overbought over here, 90. Okay, so you'd want to think about getting out on something like this, 92. So it's, again, anything over 90, but especially 92, so certainly 95 and 100. My God, you've got to get out. Fair enough. And then what happened? We consolidated once again to the tune of 53%. Thank God for the money flow index. Right, so what happened here? So we've got a low form here, a higher low form here. This marked the next big move on this low form over here. And what happened here? About 250% move. Lovely, that's very nice. We found a peak, overbought RSI, money flow index, and divergence formed on here as well. And thank God you took that seriously, because if you didn't, oosh, you would have been down 74% overnight. So from here we started to trend up. This is fine. This is just a trending move. This matches the money flow index with the RSI. All of that's just a trending move. That's fine. And then boosh, all the way down to, you know, so this could have been seen on the money flow index. We've got an overheated read over here at 98. You would have wanted to get out there anyway. We went on to make a new high over here. Fair enough. Plummeted. Death. Destruction. So think about it in terms of overbought should be taken seriously. If you want to buy into anything and it's above 92, for instance, you just don't want to do it. If it's above 95, you certainly don't want to do it. And if it's anywhere above 95, I mean, just never ever do it. Divergences count for a lot when you're looking for bottoms, just like the RSI, but probably in many ways more so for the money flow index. But if they're both reading it, that's fine. Because if we can see here, we got divergence on the money flow index, but not on the RSI. If you would have taken the RSI on face value, you wouldn't have got this move. That's 100% over a few days. Is it the same here? Yeah, we did get bullish divergence over here, and that would have helped. So double confirmation there with the RSI and the money flow index, and that was what, a 240% move. So divergences, bullish divergences, bearish divergences, just like the RSI, works for the money flow index. But overbought territory for the money flow index counts for a hell of a lot. Oversold doesn't mean anything. In simple terms, that's how you should really think about using it. Anyway, other than that, I'll leave it with you there. Hope you have a nice day. Take it easy.